the husband got sick, was diagnosed with a chronic illness.
Mostly cancer in this country.
Oh, there's a lot of cancer. Did you know that the statistics is so high these days, right? And so they was diagnosed with a chronic illness. And this diagnosis meant that the husband needed to take that time, could not work. I mean, if you're diagnosed with something so chronic and it's a sudden illness, the husband couldn't work. Number one thing is, how does the family survive without second income that was, keeping their lifestyle in the first place? And the second thing is, now we have to face an illness in the family that everyone is nervous about. You do not want to compound it with financial worries. That's what we're saying. So this family were blessed enough to be able to sort of go back into their coverage, and we were able to get them an 80%. Based on the assessment of the illness, they were able to get something like 80% off that illness that they had. So from their coverage. So let me explain that to you. A lot of people say, what does that mean? If the family got a 500,000 coverage, it meant that
is it life insurance coverage?
Of life insurance coverage that has living benefits. Does that make sense? So it has life insurance with living benefits that covers terminal, critical, chronic illness.
So this is it short? There is a long whole life insurance. And then short.
You're getting technical now.
I'm just trying because
I like that.
Is it short term or long?
This, you can
whole
get
life
it.
insurance.
You can get it either they got a whole life, but you can still get a short term as well with the living benefit. Like they call it term insurance. So this one was an index universal life insurance that had the living benefits, and so they were putting money away. They had the coverage. They had living benefits within it, and they had cash value within the insurance. And so when the illness happened, the first thing you don't think of, I have life insurance. Actually, they didn't. They were worried about the guy being sick. That's the first thing we worry about. But because they made provision in the past, they were able to go to it, get that money. So all they needed to do was get through the health questions. All that is real. They were ill. The guy was ill. So they had to get the insurance company to come up, show them the illness, be able to get a coverage and be able to get a living benefit sort of payout. It's called accelerated death benefit. They were able to get 80% of 500,000 based on the illness. So please calculate 80% of 500,000. I want you to calculate it for me. Do you have a calculator there?
Yeah, let me see.
So, and then the other thing, they didn't ask them, do you have credit? No, because if at that time you want to start taking money from any other investment, it might be down to you actually just selling that investment short.
So that would be 400,000.
Thank you.
Oh,
they got 400,000. Think about what 400,000 could do to that family. They were so grateful, and they could now face the recovery.
So is it this insurance, does it cover just only illness or maybe accident?
This is the thing, when you buy the insurance, you select
which one you want.
What do you want it to cover?
Oh, okay.
Does that make sense?
Yeah.
Yes. So the family selected. I always educate the family to say, we don't know what's down the road. Any of my families I meet, and this is about helping and supporting our community, our families as well. So when you tell them what the implication of what they're getting is, you can select disability, so that if disability happens, then they get income. If they have illness, like terminal illness, chronic illness, they can get accelerated death benefit. So while you're alive and figuring out how you get healthy again, you have this money to be able to cover hospital bills without you actually, selling any of